let's get started. Three, two, one. Hey, in this video, we're going to talk about mortgage insurance. It's a topic that comes up a lot during the home buying process, and a lot of home buyers just simply don't understand what it actually does and how it can affect your home financing. So, first and foremost, what is mortgage insurance? Now, mortgage insurance, you're often going to find it as abbreviated like MI, PMI, or MIP, is an insurance policy that protects the lender in case that the borrower defaults on the mortgage loan. So it's important to note that mortgage insurance primarily benefits the lender, but it does play a very significant role in facilitating homeownership for many buyers who may not have a substantial down payment or meet certain loan criteria. So although mortgage insurance in fact does protect the lender in case of you going to say foreclosure or maybe you short sale, what it does, and also kind of like the reason why it exists is because it does allow home buyers to have the ability to purchase a home without having to put 20% down. So, for example, if mortgage insurance did not exist, then everyone looking to purchase a home will have to put at least 20% for a down payment. And that will make it extremely difficult to purchase a home because just 20% down is a lot of money for most people. Now, there are different types of mortgage insurance, and you definitely want to understand what these are when you're either buying a home or you're refinancing an existing loan. So, the two primary mortgage insurances are private mortgage insurance or PMI and mortgage insurance premium or MIP. Now, the specific type of insurance that you're going to encounter is going to depend on the loan program that you choose. So, for example, private mortgage insurance or PMI is typically associated with conventional loans when the down payment is less than 20% of the home's purchase price. The amount that you are going to pay in PMI is going to depend on two things primarily. The first one is going to be your down payment, and the second one is going to be your credit scores. Now, the more money that you put down on your purchase, then the lesser the rate of your mortgage insurance is going to be. And likewise, mortgage insurance on conventional loans are very credit score dependent. So if you want to get the lowest mortgage insurance premiums every month, and obviously I'm pretty sure you do, you'll want to have excellent credit scores because they're going to allow you to have a very low mortgage insurance premium. Now, mortgage insurance premium or MIP is associated with FHA loans, and usually it does not get removed until you pay off the loan in full. So unlike the PMI or the private mortgage insurance, MIP for FHA loans typically requires a mortgage insurance premium that is upfront and then an annual premium throughout the term of the loan. So you're going to find that when you get an FHA loan, you're going to have this thing called upfront mortgage insurance. It's going to be 1.75% of your base loan amount, and it's going to get rolled into your financing. So it's going to be shown to you as a closing cost because it is, but you do not have to pay this out of pocket. It sort of gets rolled into your entire loan. And then every month, you're going to pay mortgage insurance premium because of the annual mortgage insurance. So unlike the conventional PMI, the rate or factor of the mortgage insurance premium for FHA is basically the same for everyone, regardless of your down payment or your credit score. So with an FHA loan, it doesn't really matter whether you have a 780 credit score, a 680 credit score, or a 600 credit score. You're going to have the same MIP rate. So anyways, now that you're at this point of the video, you're probably wondering, how do you get rid of mortgage insurance, either the PMI or the MIP? So as you progress with your mortgage, you may actually reach a point where you have built enough equity in your home, either through paying down your loan or appreciation in the housing market. Now, over the last few years, home values have gone up a lot. So for a lot of people that probably bought a home without a 20% down, probably over the last 2 to 3 years, they might already have enough equity in their homes to get rid of PMI. So at this stage, if you do believe that you have enough equity in the home to get rid of PMI, and that will be 20% equity, then you may be able to request the removal of your mortgage insurance, so as long as you have a conventional loan only. Now, the PMI does not get removed automatically. The PMI does get removed automatically once the loan balance reaches less than 78% of the home's value. So over time, obviously, you're paying down the loan, from your starting point, and then once you get to that 22% equity position, then the lender removes your PMI automatically. Once you get to 80% loan to value, you may actually request the lender to get rid of it. But if you have an FHA loan, the only way to get rid of the mortgage insurance premium is by either paying off the loan by refinancing into a conventional mortgage or just not having a mortgage whatsoever. So obviously most people don't have hundreds of thousands of dollars to pay off their loans, so the most logical thing to do is by refinancing, and getting from FHA to conventional to avoid PMI is a very common strategy when it comes to refinancing. It is one of the benefits of refinancing out of an FHA loan. Now, one last thing that you want to remember is that mortgage insurance is not the same as homeowners insurance, and these two can get a little bit confusing. A lot of people actually think that they are the same thing, but they're not. So homeowners insurance protects your properties and your belongings from damage or loss, while mortgage insurance safeguards the lender financial interest in the events of you going into foreclosure. So that's basically it. That wraps up the whole overview of mortgage insurance. I mean, to conclude on this video, it is a valuable tool that allows many buyers to enter the housing market with a lower down payment. Most people that purchase a home don't have 20% down. So if you guys have any questions about mortgage insurance, how to get rid of it, how to remove it, or if you're eligible to get rid of it, look, just give us a call or comment in this video. We'll let you know exactly where you stand and what you need to do. I appreciate you for watching, and I will see you on the next one.